Hi guys, welcome back. We're back with another video, and in today's video we're going to talk about how you can manage your trades in smaller time frames. Right, I've been getting a lot of people asking me this question, so we decided to make a video on this today. Also, we're going to give you guys our templates through the link in the description below, right? So you can just check that out, right? The file is password protected, so I'm going to be giving you the password as we go through the video, so be attentive so you can be able to access that file. All right guys, so before you do anything, right, remember we always want to understand where the market is coming from our higher time frames, so we can get a clear directional bias, right? So as we can see, if we actually look at a clean chart on Euro GBP, if you go to the daily time frame, this is what we can see. All right, let me just change that. All right, as you can see in the daily time frame, we've got price giving us a very good structure right there. As you can see, what we have price giving us a change, right, in this up phase. As you can see, as the market was moving up, we had a rally, we had a base area, right, demand area formed, all right, and then price reacted to this supply zone. As you can see, this is a drop, base drop, right? You can clearly see this in your 4 hour. This is when you can actually see that this is a sell area, a sell zone. Right, as you can see, we've got a nice area there if you decide to filter this out. All right, so the most important thing is understanding your higher time frames, right? Just understanding your higher time frames, because it will help you get a clear directional bias, right? So as you can see, as the market was pushing up, right, price gave us a new low, right? As you can see, price gave us a new low. We've got another rally. We had another base, demand area formed, giving us this low, and then price continued going up and reacted at that supply zone, right? So as you can see, price has given us a new low. This is a new low, right? Meaning this up phase where we're expecting to see consecutive higher highs and higher lows, right, has changed. As you can see, we can see that we have a lower low formed right here. So just by looking at this, what we need to ask ourselves is, what caused price to push down and break that low? Where was price coming from? And as you can check above this zone, we can identify a very good sell zone right here, right? As you can see, price went back to the supply area. This is where price will do something like this, right? If this is a low, if this is your low right there, if price breaks that structure, right, price will come back to fill those orders right there, right? So this is a return to order block, and we continue going to the downside, and that's exactly what we had right here. So if you go to the H4, this is what we can see, right? This was a very good move back to that area, as we can also identify how price reacted to this hidden base area, right? Why do we call it hidden? Because you cannot clearly see it in the H4, but as you move down to the H1, right, you can clearly identify that this is a drop, base drop, right? We're making that a supply zone, and we can see how price left that area, and it's the one responsible, for the break of this structure. And if you can zoom out, as you can see, that zone is responsible for this new lower low that we identified in our daily time frame, right? In our daily time frame. So as we can see, what we have right here, as price pushes down, what we can identify is price gave us a move, right? If we look at this from the daily time frame, right, if we just clear this up, right, because we need to understand where price is going to. So right here, this is what we have, right? This was a demand zone, right, as you can see, because we had a rally, base rally, right? So as price pushed down to this area, as price pushed down to this area, we can identify how price reacted to that demand zone right there. Right, after the reaction of that demand zone, we can clearly identify a push up, giving us level 1, right, and we've got price giving us a low, higher low, right, and then we've got price breaking structure, right, as you can see, giving us a higher high right there, and giving us another higher low, right. And what I love about this one, as the market was pushing up, right, you had opportunities. As you can see, this was a nice zone, because this is the zone which is responsible for the break of this structure and the new higher high, right. So if we look at this area, this is actually a demand zone, right. As you can see how price left this area and gave us a new high right there, right. Price gave us a new high, and we can see how price then reacted, right, giving us the third level. So we can identify level 1, 2, level 3, and a peak formation, as you can see. So we're going to talk about how you can take advantage of that, right. So if we look at this from the BTMM perspective, we can clearly identify that we had a trap. If we look at this from the H4 time frame, we can see that we had a peak formation low below the 200 EMA, right. This is a peak reset. We call this a peak reset, right. That's it. That's what we call this, peak reset. As you can see, we had a peak formation right here below the 800 EMA, right, and then we can clearly identify 1 week of rise, right. These are the type of trades that we want to catch, and we can see a pullback, and we have another week of rise, right. This is following, right. As you can see, this did play around this area, right. I mean, you could have, you know, taken this area right there as a peak formation, but as you can see, it got extended. So it's level 1, level 2, and this level 2 was this area, right. And then we had the last push giving us a peak formation, right, giving us a peak formation right right there, right. So if we check our TDI, right, it was going to help us make that decision and understanding that this is a peak formation, right. So that's what we had below that area. We had a peak formation. That's something that we can clearly identify, right. Peak formation down there. Then from that area, what we can see is from the peak formation, which is this one, as you can see, this is our second leg right there, right. We can see level 1, which is 1 day of rise, right. And we can see, remember the pattern, right. Remember the pattern is W. In this case, this is for an uptrend, so the pattern is W, which is your peak formation, right. V, V, M, right, meaning we want to see a stop and low rise, stop and low rise, and peak formation reversal, right. So this is what we can actually identify right here, right. As you can see, we've got level 1 day of rise, right, and then we have another day of rise, right. After that day of rise, this is the area that we were talking about, which was a very good area, right. And for more confluence, what I would actually add here is a Fibonacci tool, right, to measure it from this low to this high, because this is you know, this is actually one level, right. This is actually one level, as you can see, 1 day of rise, right. So I'll take my Fibonacci from this low to this high right there, and I'll wait to take trades around the 50 and 61.80 level. And as you can see what happened right here. So if we actually go to that day, right, if we actually go to that day, this is what we can identify, right. Very clean move. As you can see, this was on a Tuesday, right. This was on a Tuesday, right. What we had was we had a stop hunt below the Asian session, and we had a rise, right. Remember, that's the pattern. We said WVVM, right. Peak formation, low, right. Stop hunt low, rise, stop hunt low, rise, and then reversal. So this is your peak, and then level 1, level 2, then level 3 into your peak formation, right. So that's what we had right there. We had a nice stop hunt below, right, and a move to the upside. As you can see, the dealer then ended the day with the peak formation and ended the day into a range, right. Similar behavior, right. Look at how he ends the day into a range. Look at this behavior. He ends the day into a range, right. I mean, you can go back test this, but this does happen a lot, and it will help you with your targets, right. So looking at this, right, if you're looking at this right here, one thing we can see is we had a nice peak formation We had a nice peak formation after 3 levels: level 1, level 2, level 3, and then we had a peak formation. If we look at this in the H4 time and the H1 time frame, this is what we can see. We had a nice peak formation, as you can see right here. We had a nice peak formation. I like this type of peak formation because it's visible, right? It's a visible stop hunt, right? It's a visible move by the dealer, right, to hit your stop losses, right? So this is when we have the first leg, and then the second leg is higher than this first leg, right? So this is a visible grab of stop losses above that area, right? And this type of setup, what I like seeing on TDI, I like to see the relative strength, right, also pointing to the downside, right, for my peak formations, right? So as you can see right here, if we check on our TDI, when this happened, right, if you look at your TDI, you had one leg in and you had one leg out, right? So this was a very nice peak formation that we had right there, right? So from that area, right, remember we look to take our trades in the 15-minute time frame, right? But we can also go down to the M5, right? So look at what we had this day. We had an Asian range, as you can see. This is what happened during Asian session, right? We had a 26 pip range, right? 26 pip range, and then we had a stop hunt above the Asian range. Remember, this was yesterday's high. This is where the stop losses are resting, above that area. So we had a nice move to just grab those stops, right? And then the dealer then came back into the range. So if you go to the M15 time frame, all right, let's go to the M5 rather. If we go to the M5 time frame, this is what we can identify, right? We had a move up that area, grabbing those stops, right? We would love to see similar behavior also on our TDI, right? Because this is a clear grab of stops, right? So if we check our TDI, this is what we can identify. Very good, right? As you can see, your relative strength is to the downside, right? So as we can see, as the market started pushing down, we had a drop, right? This is a close below the 13 EMA, which is our entry, right? We had a drop, right? And then we had a sell zone being created, base drop, because we can see how price left this area, and this is also the reason behind the break of multiple structures. So this becomes our sell zone. As you can see, the market then pushed down, trapped below the 200 EMA, and then came back to this area. So this was a nice area for you to take an entry, right? So if you can enter right there, right, meaning your stop loss will then go above this area, right? Your stop loss goes above that area, so that means you would be risking 9 pips, but just to be safe, right, you can go for 10, right? 10 pips. So it means right here on such a trade, you are targeting at least 1:3, right, to remain profitable. Your risk to reward ratio has to be 1:3, right? Meaning if you're going to be risking 10 pips, right, you have to at least make 30 pips on that trade, right? So the risk to reward makes sense. The trade has to be worth it, right? You can go for more, of course. You can go for 1:6, right? So that's what you're looking for. So as you can see right there, if your target was 30 pips, right, the target was going to be hit right about this area. This is where your target was going to be hit, right? As you can see, but you had also opportunities, right? You had multiple opportunities. We had another sell zone, a strong sell zone. Why? Because as you can see, it is the reason why excuse me, we had a new lower low, right? And as you can see, the pullback, remember the pullback, the quality pullbacks is when the market actually takes its time to pull back, right? Something like this, where if the market is moving down, right, the pullback will take time and then drop, right? These are quality ones, not these ones where you just have a drop and minor pullback and a continuation. Doesn't mean this doesn't happen in the market. It does, right? It does, but waiting for these is actually way better, right? So as you can see, this is what we had. Then we had another pullback, right, to that area, and this was a nice area for you to actually add on some trades, right? So instead of getting 30 pips, you would have added on some trades right there, all right? You would have added on some trades. You'd be looking, this is the close below, you'd be looking at an extra 23 pips, right, an extra 23 pips. But if you look at this from the M15 time frame, you can clearly see that it's clear to see what's happening. We've got a peak formation, and then we clearly identify one push and a pullback that took its time, quality, right, another drop and a pullback that takes its time, right, and actually traps above the 50 EMA. And then we had the last drop, which makes this three pushes, right, 3 daily pushes. This means that this is now 1 day of drop, right? If you look at it from the H1 time frame, you can identify that this is 1 day of drop. So that's how you can intraday trade, right? So looking at this on the next day, we can see that we had this in this case, this is a cell structure, so it means our pattern, instead of being WVVM, in this case it becomes M, all right, A W, right, because it means stop hand high, drop, stop hand high, drop, reversal, right, reversal. All right, so in this case, this is what we can identify. The next day we're expecting a stop hand high, and a drop, right? So we can see, so our Asian range. All right, guys, before I go on, the first two numbers for the password for the indicators is 50. These are the first two numbers, 50. How's it going, guys? Check out our recommended broker Winsor and discover a world of trading opportunities, from forex pairs, indices, and being able to diversify your portfolio with bouncy FDs. Get more trading power with up to a $10,000 deposit bonus, which you can utilize professionally to maximize gains on your trading account. Start trading now with different deposit methods and fast withdrawals. Sign up by clicking this link in the description below, and this will take you to this page, which will be able to sign up and trade with the best broker. Don't forget to join our Telegram channel for free signals and free setups and more educational content. All right, let's go on. All right, so as you can see on this day, we had an Asian range of 12 pips, right, and then we can see that we had a visible stop hunt above the Asian range, right, getting back into the zone. So we can clearly identify a drop, right, we can clearly identify a drop close below 13 EMA, right. To get a better entry, you can wait for a pullback around the 50, 61, 80, right. So you can see this did actually pull back around that region, right. So you can use this to minimize your risk, right. If the candle closure is too large, I'd always manage your risk. So as you can see, then we had a pullback, which also took its time. Then we had a drop, as we can see, a nice pin bar giving us a supply zone, right. As you can see, price in this case didn't really reach it right there, right. Not really crazy moves that day, right. Not really crazy moves, but as you can see, what we can clearly identify is a drop, level 1, right, and then we leveled, not really clean levels, as you can see. It's not really that clean, honestly. It was not really a clean day, right. But as you can see, we identified what we wanted to see, right. Stop at high, drop, right. So this is the second day of drop, right. And as you can see, on the next day, our range is 10 pips, right, and we have a visible stop hunt above, right. And here's our peak formation, close below 13 EMA. This would be a nice entry, right. This would be a nice entry. And as you can see, if you go down to your M5 time frame, this is where you can actually grab some more pips, all right. You don't need to trade 500 times. You can actually grab all you can, from a nice moving pair. So you can see we had a nice peak formation, and the market continued dropping, all right. As you can see, we had a nice clean move here. This is for add-ons, a clear break of structure, right. Which zone is responsible for this? So if you look above, we can identify the imbalance, right, and you can see price went back to that area. So you had areas where you could actually take some good trades. If we look at this from the M1 time frame, let's see if this allows us to look at this from the M1 time frame. Let's see. Okay, let me just look for that. I don't know if this will allow us to check what happened. Okay, I don't think no. it will allow us. But I mean, you know, these same concepts can be applied in your M1 time frame, right? Can be applied in your M1 time frame, right? So always remember that you can apply this in your M1 time frame, because I mean, here's a clean structure, a move at this area. Why did price move there? Because we had a base area. This was a demand zone, right? This was a demand zone right here. As you can see, we had this demand zone. So price moved up. What did price do? We had a rally, right? And then we had a base and another rally. So this becomes our demand zone, right? That's our demand zone. So as you can see, that is where price came back to. That is where price came back to, and price continued moving up. So these are the areas, you know, where you can actually scalp for those who want to scalp. But make sure that your risks are calculated. Right, so here's a close above 13 EMA, meaning in this case you'd be risking 3 pips, and as you can see, this went for over, you know, this is roughly 19 pips, right? So you can always use your M1 time frame to time your trades and manage your trades well, right? Remember, you need a checklist, right? Do not just, you know, start trading without a plan, right? And that is how you can then, you know, use the bigger picture to trade these smaller time frames, right? So it's very clear to see always, right, to trade in line with the market maker cycle. Peak formation, right? And then you can see we've got a stop and high drop, stop and high drop. So what are we expecting? Probably peak formation around these zones. We'll see what will happen, right? So that is a very, very, very good example. And you can actually go back test this, right? You can go back test this, and you'll be able to see, right? So, you know, that's how we trade, right? That's how you can keep your trading very simple. That's how you keep your trading very simple, by also understanding the liquidity, right? And most importantly, your structure. All right, guys, so the last numbers for the password is 200. So the password for the document, which you can find in the description below, there's a link is for those who ask for my templates and the indicators I use. You can find them there. The password is 50200. All right, guys, if you're new here, don't forget to hit that subscribe button. Also check out our free Telegram channel. Find the link in the description below. Thanks for watching, guys. Stay connected by joining our Telegram channel through the link in the description below for free signals, free setups, and more educational content. Do note that this is our only Telegram channel. Any other Telegram channel with our name or logo is a scam, and do not fall for scams. Cheers.